Guys, happy? September, I suppose. Charlie, what's the message in this big move, you think? I mean, it takes us back to where we were 2-3 weeks ago on the major averages, but it's a fast way to get there.
Yeah, I think there is some truth to the idea that the market had assumed we were going to have this wonderful Goldilocks situation of falling rates and a pretty strong economy. And both of those things seem to be built into the market. And then we got some data today that wasn't so great. And frankly, I think people are looking forward to Friday. And we're on a little bit of a razor's edge that if the number is too good, then the Fed might slow down its rate cuts. If it's too weak, it may look like the Fed is late to the game and has missed an opportunity to get a soft landing. So this is a little precarious. We don't think that people should invest for the short term. We think long term value stocks are cheap, but I have to admit the next week or so is going to be bumpy.
Bumpy is a good word for it. Adam, a month ago, right, we got a Fed meeting and then we got some jobs data and so forth that freaked the market out for the first full trading week in August. Here we are in September, starting perhaps with a freak out as well, but we've got jobs data coming in just a couple of days. So what are you noticing in investor behavior here? What do you think people should do?
So, I think the clear takeaway is that this market is much, much more sensitive to downside growth risks than they are to upside inflation ones. I think, the great big inflation monster has been conquered. We can quibble about the pace of disinflation, but the big focus by far is on growth. And we've seen these big sell-offs whenever there is the hint of a growth scare. So we saw with jobs, like you mentioned, back in August. We saw it to a certain extent today. Like you said, we're only back to where we were a couple weeks ago. But the market is very sensitive, very concerned about the outlook for growth. And I think the ideal scenario would be, resilient growth, ongoing disinflation. And even if that means the Fed moves a little slower than, 50 basis points on the 18th, they only go 25. That to me, in aggregate, is the ideal scenario. You get 25 basis points and then continued easing, resilient growth, ongoing disinflation. So today certainly was dramatic price action. I think in totality, and we're coming off of the July end earnings season, you have a couple names to go, but the July end season with decent economic data in aggregate points to resiliency, and we are seeing disinflation. So I think those kind of main drivers of the August rebound are still in place, but obviously we're going to have to watch these upcoming numbers very closely.
Charlie, you mentioned investing for the long term, I believe. I mean, either that or I'm just hearing Charlie Bobrinskoy of the past echoing in my ears. A lot of retail investors these days are using options, a lot more than they have in the past. Let's talk about the kinds of mistakes that investors tend to make if they get jumpy, particularly because the markets have been so volatile. And you can lose a lot of money even if the major indices at the end of whatever your time horizon is haven't moved that much.
Yeah, John, one of the things we advise, first of all, we don't think non-professional investors should use options on individual stocks. What they tend to do is they've seen that something has gone up for the last couple of years, and so they say, oh, I can buy an option and get leverage if it continues to go up. And the old adage, momentum works until it doesn't, is really, really true. So we are a little nervous about the overall bullishness of retail investors. We sort of agree with the Wall Street Journal article that people have gotten a little complacent here, particularly about large cap, the S&P, which just seemed to keep going up. So we would recommend again, you can get beaten up pretty badly with the bid-ask spreads in the option market. We don't think retail investors should be playing that game.